Hello everyone, welcome back to another video. Today I will talk about one of the biggest tech companies that might be at a good price to invest right now. I will talk about Facebook stock, ticker symbol FB. I will talk about their business, the good and the bad of the company, their valuation, their growth, and compare it with other tech companies and more. If you're new to my channel, please consider subscribing and smashing that like button since it really helps the channel out. Subscribe please. I know most of you watching this video are not subscribed yet. And it is completely free for you guys, but it helps me way more than you think. Also, I have a completely free Discord group chat that is already at almost 400 members in it. If you would like to join, the link for that is down in the description below. I will be leaving timestamps as well in case you would like to go directly to the comparisons or their valuation analysis. Also, I do have to say this: if you sign up with Webull to get 4 free stocks, remember you have to open an account after signing up. Just by signing up, you will not get free stocks. Then you will get 2 when you open an account and 2 free stocks more when you deposit $100. I'm saying this because I have a friend that signed up but never opened the account and never received his free stocks, and I have seen a lot of comments in other videos about this as well. Okay, let's start. I would assume all of you know what Facebook is and the platform they have, since you most likely use at least one of them. They own WhatsApp, Facebook, Instagram, which they acquired for pennies, Messenger, Oculus, and other smaller apps such as Onavo, which is a mobile web analytics platform that is smaller but is also a parent company of Facebook. What is impressive about Facebook is that there are approximately 4.66 billion people in the world or in the planet with access to the internet, and on Q3 they had 2.7 billion users, meaning that over about 60% of people with internet access use Facebook platform, and that in my opinion is huge reachability on Facebook's side. Now their valuation. The stock is currently trading at $272.87 per share and has a market cap of $777.2 billion. The stock is down over 11% since their high on September. Their users have been growing and growing over years, but people are kind of worried because Facebook is getting to a saturation point in the US and Canada, since as you can see those numbers have either decreased, stayed the same, or increased only 3% year over year. While if you see Asia Pacific and the rest of the world, the growth have been massive and they're also the majority of their users. So people are kind of worried that their users growth might slow down or decrease in the short term, and I mean it will be okay in my opinion if that happens. There are only 4 billion people in the world with access to internet and 2.7 people use Facebook. They have a maximum people they can reach, but still we have to take into consideration that their other platforms are growing faster as well. For example, Instagram had 1 billion users as of January 2020. WhatsApp got to 2 billion by March 2020. What I want to say with this is that yes, their growth in Facebook users might slow down, but that really does not worry me that much. As you can see, their revenue is still growing at a very nice pace. Obviously, it is a kind of a seasonal business since their fourth quarter is always the highest one because of the holidays. Companies, marketers, or advertisers spend way more money to attract way more people to be able to increase their sales, since Q4 is the best quarter for most retailers and e-commerce stores. But here you can see why people might be concerned about Facebook users growth. Obviously, not all users are worth the same, and it depends on their location. As you can see, the US and Canada users are worth way more than people in Europe or Asia or the rest of the world. I assume it is because most advertisers sell things within the US, and also because Americans have more accessibility to spend way more money shopping than maybe other countries. Just like the tech giants, Facebook has an excellent balance sheet. They have $55.6 billion in cash and cash equivalents and marketable securities, a total asset of $146.4 billion. Normally, small companies or medium-sized company that tend to have that much money in assets are because they have a high percentage in liabilities or in debt to be able to sustain that cash. But Facebook is definitely not the case. Facebook has only $28.7 billion in total liabilities. They could pay that with the cash that they have available and still have money left. Even if we take out their $19 billion in goodwill, which you guys know I don't like to take into consideration that much, they would still have over $127 billion left in assets. Now, if we compare Facebook with other tech companies, the other FANG, Apple, Amazon, Netflix, and Google companies, you will see that Facebook is expected to have the higher revenue growth in comparison to the rest. Analysts are expecting Facebook to have a revenue growth of 24.4% and finally achieve their $100 billion mark in revenue by 2021. Apple is expected to have 5% in revenue growth for this year, Amazon 18%, which in my opinion is kind of low for Apple and Amazon, but well, that's what analysts expect. Lastly, Google is expected to have a revenue growth of 21% by 2021. Also, if we compare the forward PE, which help us check to know where the company is heading in years measures and how profitable it will be, Facebook is the best one since it has the smallest one. Facebook has a forward PE of 23.09, Apple 32.05, Amazon 58.48, Netflix 57.80, and Google 30.12. A high forward PE ratio means that people are expecting the company to experience a significant amount of growth, and that is why their stock is higher in comparison to their earnings. This shows that Facebook is the cheapest right now since they are expected to have the highest growth by 2021 but have the smallest forward PE ratio. With this, I'm not saying that you should never invest in any of the other tech companies. No, I'm still adding to my Apple position, for example, but I'm trying to show you guys that out of the 5 companies, Facebook has the cheapest valuation right now with a higher expected growth for the year, and that is offering a nice investment opportunity for the long term. Now, let's talk about the risk of investing in Facebook and the concerns that people currently have with their platforms. First of all, we all know that every month there is something going around Facebook. The boycott that happened in June or July, the possible regulations, the government looking at the monopoly practices and data privacy, problems with the US elections, faster growth competitors such as TikTok, Facebook blocking the president of the US. All that was obviously going to bring consequences for the company. Also, we might see tech breakups or major tech regulations with the new government, and all that is currently affecting Facebook stock. Then we have risks like Apple's new IDFA, identifier for advertisers, that could impact Facebook. During Apple's annual developer conference, they announced that their new iOS will include changes to privacy management that could affect Facebook since it will be giving users a choice to block the IDFA identifier at the app level, which means that people now will be able to block data collecting from apps like Facebook, and that will affect advertisers. That is why Facebook said that it will force businesses to turn to subscriptions and other in-app payments for revenue, as advertisers will inevitably become less effective. Also, will limit business ability to utilize ad budgets effectively, and will also benefit Apple directly because its own personalized ad platform is not subject to the new iOS 14 policy. Obviously, this is concerning because Apple is a big player in the US, and Apple users are the ones that tend to spend more money shopping, and blocking Facebook for privacy issues is kind of concerning. But apparently, analysts do not think that will affect Facebook revenue since they're expecting a high revenue growth for this year. We do have to accept that privacy has affected Facebook every single year for so long that I think they will be able to go around it or find a new way to target people how they have done before. Also, I think Facebook will start diversifying a little bit more their business to be able to make more money with other things and be able to continue having such revenue growth. Now, analysts are expecting the stock to go as high as 45.5% and as low as 24.9% in the next 12 months, which obviously is a broad range, but still is a nice expectation. The best part of this is that, as you can see, the recommendations are almost all green. What this means is that 39 analysts are recommending to buy. 5 of them are recommending to hold, and only 1 to sell the stock. But now, what are my thoughts on this stock? I do have to say that I'm a Facebook shareholder. I started investing in 2018 and then sold for a profit. I know, stupid me, but that is how we learn. And bought back again in 2019. It currently represents 3.97% of my portfolio and have an average cost of $198.89 per share, which means that I'm up 36.26% in my position. I do think Facebook has been having a nice revenue growth, has a very strong balance sheet with enough cash to invest in new platforms, with $55 billion in cash, they could buy any new company to diversify their business and enter to new markets. I think that the stock is at a perfect time to buy right now. I will add more to my position and continue holding long term. I'm aware of the risk, but I think Facebook is able to give me a nice return in the long term, and I'm willing to take the risk. Let me know in the comment section below, what do you think about this company? Are you a Facebook shareholder or not, and why? Thank you everyone for watching. Please smash that like button and subscribe please. I know most of you watching this video are not subscribed yet, and it is completely free for you guys, but it helps me way more than you think. Thank you, and see you next time.